Am I too old for life insurance? How do I start one of those policies? Do IULs work for the infinite banking concept? I don't trust this concept. This has to be illegal, right? So in today's video, we're gonna go over a variety of common questions that people ask about the infinite banking concept. But before we dive in, you know the drill. Right below, click the subscribe button, and while you're at it, right above, there's a little alert. That's right, smash the alert so you're notified every time a new video is put out. So let's start with the first question. Do I need a whole life policy to do the infinite banking concept? So this is a common question I get all the time. The answer is yes, it has to be a whole life, but not just a whole life, not the one your broke-ass brother-in-law tried selling you last week. We're talking about a specially designed and engineered whole life insurance policy. But why whole life? It's simple. Whole life is the only product that allows for a level cost of insurance, meaning no increase in the cost that they charge for the death benefit. Not only that, it pays a guaranteed interest rate. Plus, all of the companies we work with have consistently, since the day they opened, paid dividends. So whole life is the predictable choice to use for the infinite banking concept, and the one that the late Nash pioneered and used. So it is the only product, the only life insurance that works for the infinite banking concept. How much money do I need to get started with the infinite banking concept? This is a question that comes through, and the answer can be a couple different things. So number one, the minimum, the bare minimum is 10 times your age. So for example, I'm 46 years old. If I had a 0 to the end of my age, that's 460, and that would be my minimum monthly premium deposit to get this started. So 10 times your age would be the bare minimum. Now, if you're under 20, it's 15 times age, and if you're over 60, it's 15 times age. So you see, there's a couple different variables. Now, why? Well, that's because in order for this to actually work and benefit you, you need to be saving enough money to make this actually work. Because remember, the infinite banking concept is the process of taking back the banking functions in your life. So we got to start with funding and capitalization of your bank. The next question is once I have a policy, how do I use it for investments? This is easy. So remember, how do you invest money today? You put money in a bank account and then you write a check or do a wire to the investment you want to put money in. This is no different because all we're doing is changing where your savings is held. We're changing it to be put into a specially designed and engineered whole life, and then we're taking a loan from the whole life policy and then investing the money. So really it's the same thing you're doing now, except for we changed where the money goes and we added one step, and that is the infinite banking concept. Because remember, when we take the money from the policy, we're taking a loan. Why? So that our money never leaves the policy, because a loan is the insurance company advancing part of our death benefit up to the cash value. We can use that and make uninterrupted compound interest. So it's really no different than what you're doing now. This one's funny. I don't trust this concept. It sounds illegal. All right, I don't get this one a lot. So they're saying they don't trust the concept, which means they don't understand the concept, because the concept's not complicated. It's a process, okay? Notice it's not a product, it's a process of taking back the banking functions in your life. Let me just frame this out, because this will tell you it's not illegal. Right now, you make credit card payments, you make car payments, you make mortgage payments, right? So all we're doing is changing who those payments go to. So we're saving up money inside of a specially designed whole life. Then we're taking money from the whole life and we're paying down the debts. So then, instead of just paying the debt off and leaving it, we're then making a payment back to the policy for the exact same amount as the credit card payment, the exact same amount as the car payment, the exact same amount as the mortgage payment. So what's illegal about that? The whole life policy has been around for hundreds of years. There's nothing wrong with it, and it's in the tax code how we're using it from a tax standpoint. So there is nothing illegal about this. It really comes down to the fact that you need to become educated. Where do I go to get started? Right here. You've arrived. I'll help you. No, let's be serious. So how do you get started in this? Well, the first thing we require is the same thing I had to go through. It is watching a 90-minute video or a 10-part video series to teach you what this concept is. Because first you need to understand what the infinite banking concept and the process is. Then we can help you after that with setting up the specially designed whole life, which is just the machine we're going to use to fund whatever it is you need to take back from the banking standpoint. So how do you get started? You watch the 90-minute video And then after that, what you're gonna do is you're gonna book a call with one of the money mentors. We're gonna find out what your needs and goals are, and then we're gonna go into that and show you how you can solve your problem. If we can't solve your problem, then don't use this concept. Because every one of our clients, all 8,000 plus, all had a problem that we were able to solve using this concept. This person's asking, how many people are actually doing this and why have I not heard of it? We get this a lot. You know, if it's so popular, if it's so good, how come I've never heard about it? So how many people are actually doing this? I don't know. I can only speak to our clients. We have over 8,000 just in the US, plus our Canadian clients. But the reason you haven't heard of it is quite simple. Who do you get your advice from when it comes to your money? Usually a financial advisor, financial services professional, an RIA, someone in the financial realm, right? Well, they're not taught this. I wasn't. 16 years as an advisor, I was never taught this. The reason they're not taught this is in order to design the whole life policy so that it works for the infinite banking concept, because remember I said it's specially designed, it requires your advisor or your agent to take a reduction in their commission of between 60 and 90%. So why haven't you heard about this? How many advisors do you know that are willing to give up 60 to 90% of their income so that you can have access to 60 to 90% more cash value inside the policy? Once you can answer that, you can understand why you probably haven't heard of this yet. Why should I listen to you, Chris? You come from Wall Street. Well, that's exactly why you should probably listen to me, because I've seen what I don't really want to tell you too much about in the Wall Street world. So I come from that world. I spent 16 years as an advisor and I learned a lot. I learned a lot that I needed to unlearn, and now I do this because in Wall Street, what I learned is exactly what I don't teach people. I learned a lot of things to tell clients so that they would give up control of their money to me, so I could manage their money and make a management fee. Today, I teach you how to take back control of your money. So you don't need me, you don't need an advisor, because you will be in control of your money, you will be educated, and you will be able to make prudent decisions based on your needs and goals, because you know your goals better than anybody. So isn't it time for you to take back control and be responsible for your own finances instead of giving up control? Can I use my policy to buy rental real estate? Yeah. I mean, this is one of the things that I don't want to say I pioneered it, but I feel like I definitely went heavy down this path. When I started using the infinite banking concept, I paid off debt first. And then after I paid off all my debts, which took several years, and I took back control of all the money I was giving away, then I started using it for real estate. So can you use it for real estate? Absolutely. You can use it in many different areas. You could use it for earnest money deposits on your wholesale deals or your real estate that you're buying. You could use it to fully fund the purchase of the property instead of using hard money or instead of using banks. And what I also used to do is just use it for the rehab. So instead of borrowing money from someone at 12, 13, 14, 15%, I would borrow money from my policy and pay my policy back 6%. You can charge yourself anything you want. When you're the bank, you make the rules. I chose 6%, but in today's interest rate cycle, that might be a bit low. So if your hard money lender's charging you 14, charge yourself 14. It works well for real estate. What are the risks associated with the infinite banking concept? The risk is on you. So the infinite banking concept is a process. So what is the risk with the process? You not following it. Let me give you an example. Risk number one. You start this concept, and we'll get to the policy in a second, but you start this concept. You take a loan from your policy and you pay off your credit card. But then you forget to set up the bill pay or the transfer for the amount you used to give the credit card back to your policy. You failed, not the concept. So you have to be an honest banker. As the late R. Nelson Nash would say in his book, don't steal the peas. He's referencing don't steal peas from your grocery store. Here, don't steal from your bank. So if you take money from your bank via a loan, pay the loan back, but pay it back based on what the money does when it goes and works for you. The other risks with this is anybody that starts the policy, you got to know that what you put in the policy in the first couple of years, you're not going to have access to 100% of that. So that's a small give back. So you're not going to have access to all of it in the beginning, but then for the rest of your life, let's just say it's year 3, 4, or 5, you're going to get more than what you put in every single year. So for the rest of your life, you're going to make more than what you put in to give up just for a couple of years. That's a risk. And the last risk, and I'm going to hit this one quick, is you don't get approved because of health reasons. Those are some of the main risks along with this. What happens if I can't pay my policy premium deposits? That's easy. So we build lots of flexibility in. So if you can't let's say you set up a policy for $10,000, but you can only make a deposit of $5,000. We build the plans with flexibility every year except for the first year. So we have the ability to reduce the amount you put in. We have the ability to use cash value to pay the premiums. Later in the policy years, you could use the dividend to pay your policy premiums. There's all sorts of options. So very rarely will you ever get yourself into a situation where you can't make the premium deposit because we build so much flexibility in. I've heard you say that you can't use an index universal life for the infinite banking concept. Why? This would take a long time, and I've got other videos that really dive into this, but the biggest reasons why an IUL does not work for the infinite banking concept is it lacks the guarantees in the fixed cost. An IUL has a rising cost of insurance. Every year you get older, the IUL gets more expensive. That's a fact. Secondarily, IULs have surrender charges in the early years. Whether it's 5 years, 6, 7, 10 years, there's a surrender charge, which means the amount of cash value you have is not the amount of cash value you can use. In the infinite banking concept, you want to be able to use as much of your cash value as you can to go out and work for you for the infinite banking concept. Those are just a couple of the reasons, but there's a lot more that I could get into, and I do in another video on my YouTube channel called IUL versus whole life. Check it out. How early should I start one of these policies for my child? Well, when Vivi was born, I started her policy when she was 6 months old. So I guess there you go. Once your child gets a Social Security card, you can start a policy. I think that's usually like 6 weeks or 12 weeks. So that's how early you should start. The sooner, the better. Because hey, the one thing I can tell you is is mathematics. So compound interest works best with time. The reason my daughter's works so well is she's got a lot of time for her money to grow with uninterrupted compound interest. So the earlier, the better. That's the best answer I can give you. This one's the other end of the spectrum. Am I too old to start one of these policies? Well, I don't really know how old this person is, but can you be too old to start one of these? I guess so. And usually I would say that's going to start around 70 to 74 years old. Because at that point, the cost of insurance is so high because you have your mortality table shorter. In other words, the insurance company knows when we're all going to go and graduate onto a better place. Die is what some people call it. So therefore, the cost of insurance and the fees for that death benefit definitely play into this. So I would say if you're 70 to 74, that would kind of be the high end of the spectrum for starting this, but that's the only reason. Health reasons are really more important than age. Do my beneficiaries get taxed on the death benefit? No. So if the policy is set up properly, and I want to preface, if it's set up properly, when you pass away and the death benefit is paid on to your beneficiaries, that death benefit is tax-free. It bypasses probate. It goes directly to your beneficiaries and they do not have to pay tax on that. However, depending on where you're at from your estate perspective, if you are over the estate tax limits, the death benefit then could create a taxable situation from an estate tax. So you have to check with your state and see where your state estate tax is and the federal estate tax limits, which are pretty high, which could come down. So that's the only thing, and that's where trust planning would come in. But traditionally, and the simplest way to answer this, the death benefit is tax-free. So that concludes today's question and answers. A lot of people love this because they submit their questions and we always try to answer them in a YouTube video. So I appreciate all of you who submitted those questions, and any of you that have questions that didn't, make sure you submit them. You can comment below with your question, or you can always email them to contact@chrisnaugle.com. In the memo, just write YouTube questions. With that being said, folks, thank you for your time today. And also, while you're at it, with your time you're spending with me, click that little subscribe button and that alert, smash the alert so you're notified every time we put out a new video. And if you haven't already watched the first Q&A, that's gonna be right here or right here. Check it out and that will bring you right to current. Oh, last thing, I mentioned a 90-minute video that you should watch before booking a call. That video will also be in the description, so watch the 90-minute video, book a call with us, and we'll show you how this can solve your problems.